Alright, listen up, because this is seriously simple. Here's the deal. This works on everything. Forex, crypto, gold, stocks, you name it. It works. And guess what? You pick the time frame. You want to trade fast? Go for it. Want to chill and look for the bigger picture? Totally fine. It's your call. Now, we're keeping it super basic. All we need are moving averages. You know, those lines that smoothed out the price action. You can use whatever moving average indicator you like. It doesn't matter. Well, I personally dig the 10 and 1 different moving averages indicators. So, fire up your trading view or whatever platform you're rocking, MetaTrader or anything, and search for the indicator. Now, the 10 and 1 different moving averages indicator comes with a 200 EMA already on the chart, which is cool, but we need to tweak it a bit. Go into the indicator settings. This is where the magic starts. See the first moving average? We're gonna change that puppy to simple moving average or SMA. Change the period to either 90 or 99. And of course, pick a color that pops, something you can see easily. Now, here's the kicker. Enable the second moving average. Change that one to SMA2, but this time, set the period to 7. Yeah, 7. And again, pick a color that stands out. One last thing, head over to the style section and make those lines a little thicker. You want it to be nice and bold, so you can see them clearly on your chart. Trust me, these two lines, the 90 or 99 SMA and the 7 SMA, are gonna be your new friends. We're setting up the battlefield, and in the next step, we're gonna show you how to read these lines and start pulling those profits. You're gonna love this. Alright, so we've got those two lines on your chart. Now here's the golden rule, the one you never wanna forget. Don't fight the trend. Seriously, that's like trying to swim upstream. Here's how you spot the trend. Look at where the price candles are compared to that 90 or 99 SMA. If the candles are hanging out above that line, that's your green light, baby. That's an uptrend. The market's saying we're going up. Now flip that around. If the candles are chilling below the 90 or 99 SMA, that's a red flag. That's a downtrend. The market's telling you we're heading south. It's that simple. You're not trying to be a hero here. We're just riding the wave. You see the trend, you go with it. Okay, so we've got our trend. Now we need to know when to jump in, right? That's where the trigger candle comes in. And trust me, this is the only candle patterns you gotta remember for this whole strategy. And I call it the trigger candle cause that's exactly what it does. It triggers your trade. Here's the breakdown. You know candles have a body and those little wicks or shadows, right? We're focusing on the wicks or shadows. For bullish trigger candles, imagine a green or bullish candle. Now, if the lower shadow of the candle is at least 1.5 times the size of the candle's body and the up shadow is tiny, like barely there, that's your bullish trigger. That candle is screaming we're going up. And for bearish trigger candle, now picture a red or bearish candle. This time, if the upper shadow is 1.5 times the size of the body and the lower shadow is small, that's your bearish trigger. That candle's shouting, we're going down. Basically, we're looking for candles with super long shadows in the direction of the trend and short shadows against it. Those long shadows shows a strong push in that direction. We're about to put it all together and show you how to use these trigger candles with the moving averages to nail those entries. Get ready, cause this is where it gets really good. Alright, so let's break down some real examples so you see exactly how this thing works. Okay, so picture this. You're looking at your chart and you see the price candles are hanging out below the 90 or 99 SMA line. Boom. Downtrend. That means we're only looking for sell opportunities. Forget about buying. We're riding the down wave. Now we're waiting for our trigger candle. Remember that bearish trigger? Long upper shadow, red candle? Here's the kicker. The upper shadow has to touch or come real close to the 7 SMA line that's sitting above it. That 7 SMA is acting like a resistance level, and that trigger candle is confirming the rejection. So, you see that bearish trigger candle with its long upper shadow kissing the 7 SMA and the lower shadow is tiny? You've got your sell signal. Your entry price is the lowest price that the trigger candle hit. You're entering at the break of that low. Set your stop loss just a little bit above the highest price of that trigger candle reached. This protects you if the trade goes against you. And for target, this is where you can really make some money. Aim for the target that's 2 to 5 times your risk. I personally like 2.5 times the risk. It's a good balance. The strategy gives you the potential for high rewards. So let's flip that for buy trade. Super simple. Okay, so picture this. Candles are hanging above the 90 or 99 SMA. That's our go signal for buys. Now we're hunting for a green candle, a bullish one. We need that long bottom shadow, like way longer than the body, and a tiny top shadow. And here's the kicker. The bottom shadow needs to be touching or almost touching the 7 SMA below it. Boom. That's our trigger. To jump in, you buy when the price breaks above the high of that candle. And then you're jumping in with a solid plan. It's all about being patient and waiting for those high probability setups.